Good morning and welcome to the Climate Business Forum. I'm really pleased that IFC is continuing to work with ASrIA, long-term partners of ours, and I wish them the very best for this conference. I'm really sorry that I can't be with you today. I very much wanted to be there, but urgent business here in Washington has kept me here. But I'm pleased to take this opportunity to speak briefly about the impact of climate change on growth, on jobs, on competitiveness, and what this means for Asian business. This is not a problem that governments alone can solve, climate change. It will take governments and business working together to meet the climate challenges we're already facing. Climate change impacts all of us. It will result in more frequent extreme weather events, and that in turn is beginning to affect the bottom line. For example, in 2011, floods in Thailand permanently shut down 1,500 businesses. We've seen across the Pacific and in the Philippines extraordinary challenges to business as a result of extreme weather events over the last few years. Typhoon Haiyan last year devastated the economy of one region, and if a storm of such size were to move just 200 miles to the north, the impact on Metro Manila, 25% of the GDP of the Philippines, would be devastating. This is not immaterial. This is not low risk. The challenge, however, for business is to shift the narrative of climate change from climate risk to climate opportunity. In the past 5 years, the drop in price of low-carbon technologies, especially solar but other renewables as well, mean that it is now possible to imagine that we can reduce emissions in our energy systems and drive strong economic performance and healthier development. Couple that with big gains in energy efficiency, with increased urban transport solutions, and Asian business can continue its global penetration. The good news is that just a couple of weeks ago, we saw an impressive example of the private sector coming together with government to work towards that lower carbon and more resilient future. At the United Nations in New York, the Secretary General's Climate Leadership Summit squarely put private sector at the table. Investors pledged to disclose their carbon footprint and to decarbonize their portfolios, worth trillions of dollars. Insurance companies promised to double their green investments by 2015 and completely recalibrate the way that they understand climate risk. Companies, governments, and civil society together pledged to work to eliminate illegal deforestation in their supply chains by 2030. And, perhaps more impressive of all, over 1,300 businesses and investors, including from Asia, Ricoh, Jain Irrigation, Delta Electronics and China Steel, joined together with 74 countries and 23 subnational governments to express their support for pricing carbon. Pricing carbon is already well established in the Asia region. In China, the Republic of Korea and the city of Tokyo, they are already leading with innovations in emissions trading schemes. As China works towards a national trading system by 2016, which will make it the largest carbon market in the world, other countries are following Asia's lead and will link to Asia's emissions trading systems, building from the bottom up a globally networked carbon market. It's time to seize this momentum and carry it forward. There's a huge need for increased climate-smart investment in infrastructure, in buildings, in agriculture and agribusiness, in every aspect of our economy. Worldwide, just under $1 billion a day have been flowing between and within countries to finance low-carbon development, expand the use of clean energy and energy efficiency, and to increase the resilience of our economies to the impacts of climate change. Those numbers are barely half the volume the World Economic Forum estimates we need to meet the climate challenge, particularly in developing countries where energy and infrastructure decisions made today will shape growth patterns for generations, and the wrong decisions will lock those economies into high-risk, high-carbon pathways that will not be sustainable. The enormous growth in Asia and the predicted expansion in the number of people living in cities opens up tremendous opportunities for greener growth, green transport solutions, and green buildings in order to build livable cities where businesses will want to invest, where people will be able to live healthily, and will be essential to build cities that are resilient to those increased storms, their intensity and frequency that we've already discussed. Emerging markets will be the largest drivers of renewables growth in the next few years too. Of about 140 countries with renewables targets or policies in place, 2/3 are in the developing world. Several countries in Asia, including India, the Philippines, Thailand and China, have some of the world's most aggressive clean energy plans, and they're beginning to attract investment. Their stretch targets are having an impact. China has outpaced the US as the world's leading domestic renewable energy market in recent times. And now to the financial sector. IFC's partner banks in China benefit from a risk-sharing facility and have lent over $6 billion for climate-smart projects since 2006. They are rapidly expanding at the provincial level, and the program is now being replicated in the Philippines and Vietnam. But we need to go much further than this. There needs to be a much wider understanding within the financial sector, from retail banking to commercial banking to asset management and to asset owners, of the risks and the possibilities that come from understanding that we need a lower carbon future and a more resilient future. Do we all understand the vulnerabilities in our portfolios of an overexposure to high carbon assets at a time when the world is rethinking the risk associated with carbon? Over the past year, we've seen the green bond market boom worldwide. It's at more than $30 billion for the year at this moment in time, mobilising private sector financing for climate-smart activities. The World Bank Group's green bonds, both on IFC and the World Bank's balance sheets, are financing projects in India, Indonesia and China that aim to increase the share of clean energy in electricity, strengthen flood management, improve urban infrastructure, and support investments in geothermal energy, reforestation and urban transport. It was in Taiwan that we saw the first corporate Asia green bond earlier this year. While the green bond market is playing an increasingly important role in diverting capital towards low carbon development, the next stage to mobilising capital at scale is likely to be asset-backed bonds. As the private sector said so clearly at the Climate Summit, we also need to see policy changes by government that will spur low-carbon investments. Government has a responsibility to set clear, strong, long-range targets and show the direction of travel in which it wishes the private sector to innovate. Everything from regulation to tax systems to fiscal and other macroeconomic policies can make clear what investments governments hope will succeed the most. We've seen some good progress here in Asia. In the Republic of Korea, residents wanting to invest in energy savings facilities can apply for a tax waiver. India has set up tax incentives and subsidies, along with mass distribution of lamps to encourage energy-efficient lighting. China has a subsidy program that began with the compact fluorescent lamp promotion and has now been extended to include other energy-efficient appliances. These types of policy measures are key to unlocking the vast potential for emissions reductions and the economic gains from improving energy efficiency. But Asian business also needs to stop and in its dialogue with government be engaged in the need for Asian governments to reduce harmful fossil fuel subsidies. $500 billion a year are used in economies around the world, including G20 economies, to subsidise fossil fuels which are harmful to the environment, which halt low carbon growth, and which are not helpful to the poor either. And this is something that will have to be addressed by major Asian economies in the next few years. So my message to all of you is that there is a bounty of opportunity in Asia. That opportunity can be realised by really understanding fully the risks that the climate science would suggest each and every one of us face if we are not able to aggressively attack climate change and if we continue to operate on a business as usual basis. And there is a bounty of opportunity that will come if we are able to invest in better resilience to the impacts of climate change, which are already stored up in this warmed planet of ours. In Asia, you have a proud tradition of innovation. You have high levels of liquidity. You have clubs of industry, and you have tremendous opportunity. Every one of us now needs to take climate into account in our business strategies, in our financial strategies, and as we think about the products and services of the future. There is a bright, green, clean, healthy future ahead of us, but it means taking action now. I look forward to working with you and also celebrating your successes in this different but very challenging world in which we live. Thank you.